Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me to this morning's webinar. Well, the Australian dollar was once again attempted to try and take out further gains towards the upside, with 78.40 currently containing the rally. After printing a high of 36, it was seen that the Australian dollar is remaining persistent to push higher. Now at the moment we've got a resistance of 78.40 and also we've got the 60-day moving average, which you can see here comes in around 78.58. Overall, I am not bullish at these levels. I think the market will fail, as it has done in the past, and eventually turn around and look lower towards the region of 77.60, maybe towards the bull camp, which is at 76.85. Yesterday, the GDP came out slightly worse than the market expected, with the Australian Bureau of Statistics' most accurate measure of living standards showed that the Australians are no better off per person than they were this time last year, as weakening offshore trade robbed the economy of momentum. The latest national accounts results revealed also that the numbers barely moved in the last 12 months and went backwards in 2 quarters in 2017. The indicators of the economic growth of population increases are considered gross domestic product, and also grew by nothing at all in the December quarter. So it must question that the fact is, why the Australian dollar can it sustain these levels? I say no. Therefore, we should see a move away from this 78.40 level. Overnight, the euro, or more to the fact, the dollar index went for the down test and it hit a low of 89.34 before it's returning back above the key level of 89.40. Overall, I'm not bearish at these levels. Now, we've got a few things coming out. Tonight, we've got the ECB meeting. Now, no change in monetary policy rates and QE is expected. And then tomorrow, we've got the non-farm payrolls. But more importantly, the market will be looking at the average hourly earnings than the NFP. So that comes out around late tomorrow night. Overall, I expect to see the market fail at current levels above 124 for the euro and look back away from 124.55 resistance and down towards 123.85 or towards the support of 122.95.05. The dollar-yen case is questionable about where we are trading. The fact is the market is consolidated over the last 24 hours, with recent yen strength slightly easing. Now, from a technical point, you can see here from this point on the dailies on the RSI, the lower point has got a rising RSI. This is bullish divergence. Therefore, I expect to see the market move away from the low 105 and look up towards 106.40.45. Now, a break above there will give further scope towards 106.95.05 to 107.75. Until we get a break sub 105, then I will remain bullish. Well, the pound over the last 6 trading days is pushing now towards a resistance of 139.30.40, and you can see here it took just about a day to actually wipe out most of these gains recently. Now the question is, with the resistance, or the downtrend should I say, coming in at 139.30.40 should hold, and I do expect to see the market move away and look to the immediate target that comes in at 138.50. And then I'm looking for a further challenge to the downside, with the uptrend slightly risen now at 137.25.40. My concerns with silver and gold, the fact is that the rally was not supportive. Now, as you can see overnight, the market for gold fell a whopping $18 and now set to challenge lower, with 23 to 18 to maybe down to 12 as a target. Any advances should find a resistance around 30 to 36, but the bullish foundation is still to hold around 1,300. Looking at the silver, clearly backed away from that $16.90.95 level, and now looking back towards the downside, which comes in at $16.15.20. You can see the indicators are quite flat, so we're still trading sideways in a $16.15 to $16.90.95 band. Wrapping up with oil. Well, my view came through overnight, and I'm still holding to the bearish fact that oil can't sustain rallies. Reason being is if you look at this weekly, the market is very, or should I say, extremely negative. Therefore, I do expect to see further pressure to the downside with the target coming at 59.25. A break beneath there could give scope towards $55 a barrel, with the resistance on the day to cap around $61.80 to $62.60. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the rest of the day that's ahead.